Hey everybody, so let's talk about why rent prices are coming down, what it really means for the price of homes, even rental units that you may want to purchase over the next couple of months to a year. And let's talk about what the effect of people moving in back with their family has on these rental units that really can't be rented anymore and why they have to bring down these prices. Let's also talk about, are we getting ready for some massive fire sales? And again, just like the stock market where you have these massive crashes, they're called flash crashes, you could see some fire sales where you buy $1 million house for like half the money. And that's coming. So we'll talk about which areas are going to be affected the first. Let's also talk about why inventory is skyrocketing and why a lot of these home builders are still building brand new homes, even though they have a pile of inventory, huge pile of inventory that just can't be sold. And then let's talk about why the age of inventory is going up and what's happening with the prices. All right, let's get into it. All right, before we get into this, let's just take a look at Austin, Texas again. This home that was slashed, we went over this a few days ago and over a couple other cities, but this home is now down $65,000 in price as of November 4th. So you think, like this is the insane part. That was 2 weeks ago. And you think that after 2 weeks, when you slash a home by $65,000 that you'd have, well, right, you'd expect a lot of buyers, a lot of interest, that this thing would be sold already, down 65 grand. I mean, that's insane. Nobody interested at all. Look at this thing. It's still on here. Here's another one slashed 5,000. Another one slashed $10,000. Slashed $15,000, 15,000, 10,000, $20,000 on this home right here. I mean, this is Austin, Texas, too. You're not talking about like the boonies over here. $60,000 price cut. Just imagine if you purchased a home with these interest rates and then found out a week later that it lost $60,000 in value. Oh boy, these prices are just being $18,000, $25,000 on this home right here. And this is at 4808 Turnstone Drive in Austin, Texas. Wow. Look at these prices just dumping down. $10,000, $15,000, another 15, another 14, $25,000 on this place here. Wow. I mean, these prices, this is insanity. And if I start looking at slightly more expensive homes, oh my God, another one for $40,000 slash $45,000. I mean, this is getting ridiculous over the next couple of months. And I think we may hit that, what I call capitulation in the stock market. We may hit something like that where you see these massive fire sales in homes happen around the month of February. So right now, work your butt off. Get as much money as possible saved up. And then you can contact me again via my Patreon. And I do actually pay for individuals that are interested. Every time you help me find a rental or even residence property for purchase, I will pay you $5,000. All you have to do is be in one of those two Patreon tiers down there. Just go to patreon.com and type in real estate with Alan and you'll be able to find that. But $5,000 is a fantastic pickup. And I work on a daily basis. I have multiple jobs. I don't have the time to do it. And if I know I'm going to make several $100,000 off a property, me paying you $5,000 for your hard work isn't an issue at all. And I will gladly do it every single day for the rest of my life. And again, you can literally just look at properties off of your computer if you're interested. Remotely work, find me a great property, and you will be paid as well. $5,000 commission. So, I mean, let's get back to some of these properties here. This is unbelievable. $2,000, $15,000. I mean, it's getting bad out there. $23,000 right here on this home. So it's pretty shocking. Again, now let's switch over and take a look at property types by investor market share. And as you can see over here, you could go all the way back to 2003, right here where my finger's pointing at. And from 2003, you can see that we have steadily increased, okay, year over year over year over year. And what this gray line here is showing you, if you take a look here, this is your multi-family, okay, 2 to 4 units. Okay, and these are increasing, and it kind of took off. You can see this real just kind of divergence that happens here around 2012. And then they kind of peak right here around 2018, 2019, and they go down. One really big reason is because right here, you can kind of mark that. You can see right here who declares COVID, basically the pandemic right here. And you can see that drop off and then a leveling. And that's because the interest rates came down so low that people were getting 2.4, 2.5% interest rates, even lower. I mean, a friend of mine qualified at 2%. I'm like, goodness gracious. I didn't even qualify at 2%. I refinanced all of my properties. I mean, when you have to refinance like dozens and dozens and dozens of places, it gets ridiculous. But on average, I refinanced everything between 2.4 and 2.8. So I'm not sure how she got 2.0. But and so right here, as you can see this pullback in these multifamily homes, and you can see this massive increase right here. This is your single family residential homes. And if you see a massive increase like this year in 2020, that's because people got free money. They got free checks from the government. They got basically bonuses. I mean, they got all sorts of money. They opened up fake businesses, and then interest unbelievably came down somewhere between that 2 to 2.5%. For those mortgage rates, just really, really incentivized people to buy homes. And this is what you're seeing. Now, this is not normal. As you can see, really, we should be somewhere along this line, kind of. If I could draw, a median line here, you'd see it. But this has to come back to normality. And once this does, I'm assuming some massive. If you think these, drops that I just showed you over here on Zillow of $60,000 are a buy opportunity, they're not. Because I think December and January are going to get very, very ugly. So get that money ready. Start saving money. Again, if you need any kind of help in trying to figure out your finances, how much money you have, how much money you need to purchase your first home or to purchase your first rental, you can always talk to me. Again, the link to Patreon in my description down below. Sign up for one of those tiers and then just text me and make sure you have that Patreon app downloaded. Again, over here, you can see that, we are bound for a massive crash. And this is why these multifamily units right now are really signaling a downtrend, because they just went way too high in these rental properties. You're going to see a lot of rents be slashed. So the 2-year rent growth streak ends in small step towards normalcy. Asking rents across the United States of America, as measured by the smooth, non-seasonally adjusted Zillow observed rent index, finally ended a non-growth streak in October, falling. So again, you're now going to see this massive downtrend. It's going to continue. And I know we're somewhere up from about what I'd say about 1,400-ish here. As you can see, this insanity. Really, we should have been maybe at 1,600-ish. So, going over here in this $2,100, let's say we're going to divide that up, 1,600 by 2,100. You can see that really we need to come down another 24% in rent prices before things really make sense. Now, if I had the option, right, I have 3 residences and, and if I had sold all of them, I would absolutely not be buying a home right now. I would rent. I would do a short-term rental, maybe, a 6-month short-term rental, and then just stick it out and wait for prices to really become juicy. So over 1/3 of United States small businesses aren't able to pay full rent in October. So you're going to see businesses go on sale. You're going to see homes, these multifamily homes and rental units. There's a massive correction coming. Get that money on the sidelines. That way, when an opportunity presents itself, you can take advantage of it. Again, you can always contact me and take a look. Multifamily vacancy rate is up. We went over this yesterday. And 12-month rent growth is literally cut by 50%. So it's getting pretty ugly out there. Now, apartment demand unexpectedly fell during its busiest season, according to a new report. I mean, these are all massive signals that we're getting a massive pullback here. And if you take a look over here as well, we discussed this a few days ago, property prices are down 13%. And you have to be aware of something. And the most important thing you can ever do is purchase either a home for yourself or a rental unit at a good price. The actual mortgage rates don't matter because in a year or 2 or 3, you're going to be able to refinance. Then you're going to be able to do a cash equity withdrawal out of that property and then take that cash and put it into another place. And you'll be in a very good area of success and becoming a successful landlord and really getting to that financial freedom. Now, if you buy a home at a bad price, right, versus a good price, that home then goes down, let's say $60,000, like some of these homes did on Zillow. At that point, what's really going to happen is you're going to be upside down. You can never, you are not allowed to refinance to do anything when you're upside down. So then you're stuck maybe for decades. You may never get out of that if you bought it at a really bad price. So you really want to focus on the price, and then the mortgage rates, that's temporary, right? Even if you do PMI, let's say you don't have the 20%, then you put down only 5%. In fact, I've bought properties where I put down like $3,000. That's all I put down. And then the home value rose. I refinanced and took out a home equity cash withdrawal out of that place, and then I ended up basically not being able to I didn't have to worry about PMI or anything. So again, in PMI is your private mortgage insurance, which means if you don't have that 20%, it's like another extra $100 a month generally. So this is hard.com, another one of the tools I use if you are interested. This is the website. So let's go to Redfin over here. Now, Redfin weekly housing market data. So let's go back over here, and this is putting us back to December of 2018, so about 4 years ago. And if you take a look right here, so this is the age of inventory in all Redfin metros. Okay, and you can see the age of inventory is about 87.5 days, 88 days. And you can see the age of inventory fall down all the way, right? This is 2019 and then 2020, right? And you can see right here, this is pretty much identical to, and you can see it even fall down more over here. Take a look at this. This is insane. And obviously, right, the rates came down to stupid low. And now you're seeing that age of inventory just increase in every aspect. Look at that. So really, homes are losing value on a daily basis. There's some homes that are down $60,000 in a single week, while other homes, including those, are all now on the markets longer. So the price is decreasing of the homes, but nobody's buying them. So it's a really good signal that, we are getting ready for that nice, beautiful correction. So if you are interested in a rental or home property, the day is going to come very, very soon. Now let's take a look at it. We're back on Redfin's here. This is their weekly housing market data. So these are homes that are off the market in 2 weeks as a percentage of pending sales in all the Redfin metros. So you can see right here, it's about 54%. Going back, let's say January, February, right, of 2022, and it kind of peaks right here by February to March. It almost looks like, I'd say it peaks basically at the very last few days of February, or maybe or March 1st. Let's call it March 1st. So we reached the true peak of how quickly homes are sold March 1st. And then it's this massive drop ever since March. Homes are, look at that. Homes are all staying way past. Right now, we are getting to levels 33%. And over here, we're down to 22%. 22% from highs of 55. So really, people are not buying these homes. They've gone from being, half the homes gone in literally 14 days to now pretty much 80%. Wow. 80% of the homes are still on market. So again, there's always going to be exceptions. There's a really sought out area and people really need to be there. So those areas are kind of offsetting the 80 other percent of America where people are just not interested in buying any of this stuff. So watch out. Austin, Texas is going to get destroyed. North Carolina, South Carolina, pretty much all of California, especially Southern California. I'd say the whole Tampa Bay or Clearwater area in Florida, Miami, Sarasota, all of that is just goodness gracious. Everything around Daytona, those are going to see some massive crashes. I'm talking about 40, 50%. Because during basically what happened in 2020 caused people to use this free government money and to just kind of head for the coastlines. So if you look at like a map of United States, majority of all Americans live along the coastlines, either the southern portions of Florida, and then the entire East Coast and the entire West Coast is completely, I mean, it's like a mega heat map. So if you take a look at central, America it's very low population to massive population. And people generally, when they, and if you're trying to get married, you're trying to date and you're trying to meet somebody, you're probably better off. You have a better selection of finding the right person for yourself, either on the East or West Coast. If you're somewhere in the middle of America and stuck there, it's really slim pickings. So, I know a lot of my intelligent friends, really smart people that went to medical school, that went to law school. Once they got everything done, they settled, they flew out to they went to the East Coast. They spent a good year there. They found whoever they wanted. They married, and then they moved then to their basically dream state or dream location. But again, be careful. Do not be purchasing anything right now. I will send out more data. Again, there are spreadsheets coming out as well. And again, if you're interested in purchasing a home, let me know. Also, if you want to earn $5,000 commission per property to help me find places, I do offer that as well. And it's very easy money. All you need is literally an internet connection and a laptop. If you help me find a property in either Kentucky, Wisconsin, or Indiana, I will pay $5,000 per property to you. And again, we can start a partnership as well. And also, I am looking for, property managers. So let me know in the comment section down below, or just send me an email at Real Estate with Alan. Again, I do everything via Patreon. It's a much safer place. Again, for that, just go into the description of this video, click on that Patreon link, or just go to patreon.com and then type in Real Estate with Alan. Again, thank you for watching and take care.